investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Tiger Technicians Hour, Monday the 19th. And we're looking at the Dow down 12 at 32,908. There's some kind of internal strength because the Dow hit the 200 period moving average Friday. It's trying to bounce. If it goes below 32,830 and holds there for more than 90 minutes today, it'll probably retest the low of Friday. So with that said, let's go to our first caller. We've got Earl in Seminole. Earl, how are you?
I'm doing fine, Basil. Just a little chilly down here.
If it's chilly for you, can imagine how it's chilly for us as well. Yeah, up in the north.
Yeah, I left Pennsylvania 40 years ago.
Oh, okay. Well, I have to.
So I knew. I grew up in the cold.
Oh, you grew up in the cold. Okay, I didn't. I got you from South Africa, warm South Africa, and our winters were the exact opposite of yours in the sense that winter is summertime there and summertime is wintertime. But
yes,
in Johannesburg and Cape Town, it's really about 6 weeks of pretty cold weather. It does get pretty cold.
Right.
And also, in my day, they didn't have heaters and all that stuff. So I was a shiverer. I just shivered all day until the summer came along. But anyway, it takes a little while. I'm getting used to the winter, and I have to tell you something. As you get older, you find that the heat is not so great, and I don't like the winter too much. But the fact is, I can keep warm in the winter. Summertime gets really hot. Yeah. So what do you want to look at?
I want to take a look at MAXR.
Do you have it?
It jumped up Friday 130% on a buyout.
Unbelievable. Oh, it was a buyout. Do you own it?
Yeah, well, I've been watching it, and I wondered, is it tradable?
So
maybe you could give your take on what happens. I've never seen one do that.
So let me go through a couple of things. Number one is, when you have a stock that's in play because it's a potential takeover candidate, let's see, let me find, I think there's do I have the list in front of me? Let's just see if I can find it. I'll change this. Yeah, let me go to it. Yeah, there we are. So there's a stock, there are a couple of stocks. One is USER. Yeah, there's a stock, it's called User Testing Inc. It's a low-price stock. It had a gap from the 360 area back in late October and spiraled to $7.46, and it's been stuck in the range. So I followed takeovers for not years, decades, not necessarily as a buy or sell, just because I like to follow them. And my overall impression is this, that if there is a stock that has a definitive takeover, and that is a company that, come hell or high water, they want whatever it is that they want to take over. It's necessary. A lot of the time it's just done. It's just a done deal. But the other times the offer is there, and it's contingent upon certain parameters. It might be time, it might be price, it might be shareholder, just a whole bunch, a director, just everything goes into the pie. But the stock actually holds up. And there's really only you can do is have it as an intraday trade. In this particular case, it goes to $7.10 and it pops up to $7.46. Today it's unchanged at $7.46. But that's one thing. The other is that it is in a competitive field, and that there is the best is when there's another offer that is out, potential offer that's out there. Then what happens is, let's go back to MAXR. I haven't got the details in front of me, but then there's the rule of thumb that I have is that it's in play. And rather than just dismissing it and saying, okay, that's done, it's going to be taken over, you look at it and say, wait a minute, at 51.45, if it's in a field that is extremely much in demand, and I'm not sure what fields at this particular point are very, very much in demand because the market itself has cooled down, then you're in a completely different area. What you're in the area is you've got fabulous support, and I'm just want to put this in Max R Tech. So here we go. And remember that the whole tech area is kind of under pressure. I'm going to go there right now. It does, and I'll put a question mark, and it'll pop up, and it says, innovative businesses, more than 50 governments to monitor global change, deliver broadband communication, and advanced space operations with capabilities in space infrastructure and Earth intelligence. Wow, that all just sounds great. But where now what we want to see is, do you know who wanted to take them over?
I think it's Advent.
Okay, so Advent. So this is what I'm looking at. In this particular area right now, from the way I'm looking at it, especially since we were in the community for my subscribers, we were in, just for a brief moment, we were in the communications, the ETF, XLC, more as an experiment than anything else, because my thinking was that that would become a dividend play at some point, because the multinationals are digesting huge gains, and maybe fund managers will be looking for somewhere else to at least divest. They're just to make a kind of a rounded portfolio, looking at potential for dividend, and these usually do become plays. My experience has been, though, that there is so much competition now in the field, with so many people cutting the cord and doing all sorts of things. So we got stopped out. We held it, took a little bit of gain, then got stopped out, and now I'm just watching it completely. So that's one area. I would do this. I wouldn't touch it right now. Do a little research. If you think that there are other areas of intrigue by some companies that there's a rumor, as long as there's a rumor, that's what you want. You want rumors to keep the price buoyant. I have a rule of thumb that goes with the gap up. I don't know if this is necessarily going to be applying to it, because it isn't just a news-related thing. It is very much, I'm saying, just like an earnings guess or something like that. This is a specific takeover. So in this particular instance, I would not do anything at this particular moment, but I would try to find out if there is another company that has shown interest in this particular takeover. If there is, then you've got the chance that they make a bigger offer, $55, and another one maybe coming in. But the fighting over takeovers I haven't seen for a while. And because of that, I'm just suggesting just watch it for a little while. I mean, a move from 22 to 51 is extraordinary. I suspect that if there isn't anything else, but it is just a pure takeover and it is going to happen, the price will just stay here. But if there is a rumor and you suddenly see it drop to $48 and hold for 2 or 3 sessions, check that out. It might be worth it. But at the same time, it is such a big move. I don't know how much more any other company is going to come in and offer. So I'm just going to suggest you, if you're asking my opinion is to do a little research, see if it's in an area that could have some kind of at least competition from the original takeover company. Someone else wants to take it over. Then you've got yourself something in play. But even then, it could just jump up and then stay. So if you miss the actual move itself, then you're kind of stuck, because it could stay within a dollar range, like it might even do here. I don't know if that helps you, but that's my thinking.
I was looking.
Yep.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back and we're on with Earl. And Earl, what were you saying? I'm sorry, we got cut off. What were you saying?
The reason why I wanted to look at it was because I used to follow Smith Wesson. And that took a tremendous jump, and then it went right up one side and right down the other. And yes. I looked at the option chain on this, and there's a big difference in the put options price from one strike to another. And I wondered if that they took that into account.
Oh, so beforehand, that's what was happening. Okay. So, well, there are a couple of things.
I mean, you can buy the put option on this for January for 43 cents, and if it moves one strike the other way, it goes to $3.
And are you talking about the 51 strike?
Yeah. I think it's the 50.
So, it's okay. So it's a 50. So your thinking right now is the excessiveness of the gap up is something that could see some kind of a give back, maybe even to the 49, 48 area. Is that kind of your thinking?
That's kind of my thinking. Is there might be a lot of profit taking, which it's already down today, 43 cents.
It is, but from where it closed, but if you actually look at the candle of Friday, the whole candle was, it gaps up, has a low of 50.68 and a high of 51.93. After the big move up, that's actually, it looks like a nice big green candle, but today it's right in the middle of that candle. You know, I like your thinking here. And it's also in the very beginning. Usually if another firm is going to come in, there's kind of a little bit of a rumor first. It takes like maybe 3 to 7 days before someone actually comes up and says, we want to make an offer. But I like your thinking. And I would just say if it holds today between 51.40 as a low and 51.60 as a high, That says that the squeeze to the upside is still going on and the profit taking hasn't yet quite begun. Because definitely people who had it on on Thursday are looking at something and they're wiping their eyes and saying, is that just a dot on my screen? Is that a mistake? Is that my toast that I just splattered onto the screen? No, that's a price. You know what I'm saying? It's this little dot up in the sky. You think it's like a little satellite or something. But I like thinking you would go all the way to January.
From the company buying is that they're going to buy it for 53 and take it private.
Oh, okay. So now it's
a solid offer, yeah.
Yeah, that's a really solid offer. I mean, Staples, we've seen so many companies when it's taken private, Twitter, when it's taken private, it just goes out of focus in terms of the price because you don't know the price. You know, this is a little different. It means if they were prepared to pay over $50, anytime it drops, they might want to add to their position. I'm not sure quite why, because it's already, they're paying 100% premium on what it was just not even 3 sessions ago. So they are determined to take this private. I'm beginning to say, you know what? It might be a little dangerous. It might be a little dangerous not because you are wrong. You could be perfectly correct, but it doesn't quite give you the gain. In other words, the premium in the option remains a premium because every time it pulls back, and even today, it's just stuck there at minus 42 cents, 51. If anything was going to happen, we're already almost an hour into the day. By 35 to 40 minutes, you would have seen some kind of profit. I'm not saying you're wrong. I'm just saying in order to make money, you know that these things can last a lot longer than your patience. So that's the only thing I'm saying. But I like your thing. You know what? I do a little bit more work. Just see when the offer is for. Is it almost immediate? When does it come about? If it gives it about 3 to 7 days, there could be a very quick pullback. But I'm just thinking that maybe there are other ways to put your money to work, because this here is you speculating on a speculation. Once removed, maybe, but I think we're now almost twice or 3 times removed by saying what will happen next, because this is a real unknown. Between you and me looking at the chart, absolutely it looks like it could easily drop to 49, 47, even 46 after a huge move like this. But that's not a guarantee, especially if it's a company that wants to take it private. It means that they've done their homework. They know that they're overpaying. They know what needs to be done, and they're still prepared to do it. So if they aren't prepared to do it, they will hope that another company comes in with an even better offer, and they will just extricate themselves with a fantastic gain, because they must have put their money to work in the 20s, under 30, let's put it that way. So they see, as it is, they don't even have to go private. They can say, you know what, we've changed our mind. I don't think it's illegal to do that, because they've said that was their statement. They could rethink it and say, on rethinking, I don't think it's illegal. It's not maybe ethical, but I don't think it's illegal. If they say after consideration, or we're having a disagreement, whatever it is. But I would just say to you, I like your thinking, but it might be hard to make money.
Well, thanks, Basil. I just wanted to get your take, because I know you've been at this a long time. And I'm sure you've seen this before.
You know, I've seen it before, but once the takeover offer isn't a takeover from a company that wants it as part of their big business plan and still be public, and once it becomes private, it means that they've done their homework. They are prepared to put the money up at this particular point. You have to accept that, and it'll just be a momentary dip at I'm sure within the next, if it just stays there. Well, you saw that stock that I was looking at a moment ago. I think there was even another one, WEBR. Was that another one? Yeah,
I think there was 3 of them that did it over last week.
This is Weber. Now, I'm not sure. Is this Weber the outdoor grill? Anyway, Weber was trading at $6.60 on the 9th. On the 10th of December, I don't know what happened. It has a huge move up. I don't think it was earnings, and pops to 797 to 814. And here it is at 806. It's been in the same range for 5 sessions. Well, because it's such a low price stock, percentage-wise, it's had been a big move if you're intraday trading, but it's this kind of stuff. Yeah, I think these things tend to stay there for a long time. So I like your thinking. I just don't know if you'll make money. That's all.
Thank you, Basil.
Thank you very much. Good call. Thank you.
Thank you.
So, pleasure. So we're looking, so after Earl's call, let's just go back again, because now we're starting to see, yes, just while we were on the line with Earl, we saw the E-mini go down to the 38, somewhere around 38.62. They have a really strong move. I was drawing this in just in the break. The Chapman wave cup formation, left side, right side, Chapman wave inside wedge target resistance line. The left side price movement, bar symmetry. It went to the exact bar, broke, and now it's at a PD. It's just digesting gains. The E-mini is down, up $1. The Dow is up 103. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So a couple of things I want to look at here. I had a question in Tiger YouTube about Exxon. It's been moving up, and the question came on Friday on a weekly basis. It finished higher last week than the previous week. Is this a bullish signal? Yeah, I just have to keep repeating what I said before, that it's had a spectacular move. It did almost a 1-to-1 of this Chapman wave falling axe formation right here, where the price makes lower highs and then much lower lows, and this goes all the way back to July of 2012 at 404.76. It went all the way down to $30, and then it rallies up and it gets to a high of 114.66 on the 9th of November. We are now the 19th of December. And what happened in the interim period is that there were multiple tests of the exactly in the 114s. It was uncanny. As the technicals are starting to slide in the MACD, the slow stochastic and the on-balance volume, but not in the 9-period moving average. Finally, now the 9-period moving average has crossed negative, and as it's crossed negative, what we are looking at is the rallies are still seeing weak technicals. If at any point Exxon in the next, I'd even say for the rest of December, which is now just a short trading a bunch of days, and that's actual days, not the number of days left, but the number of trading days. If at any point, even the first week of January, if it's able to get to 109.50, 110.10, I'll say, you know what? I've been talking about a high-level consolidation. This is even better than a high-level consolidation. It just means that buyers are still there. But at this particular point, the technicals in the daily are starting to lead the weekly on a round trip. And it had a Chapman wave 2-bar reversal. Actually, it was almost like a 3-bar reversal back in October, November. And now what we're looking at is there's also a doji candle in the monthly chart. I just have to be careful to say the energy sector is still in play in a certain way. It keeps morphing into different things. It morphs into the winter time. It morphs into what's happening in Russia, what's happening with so-called fixed prices, which are never fixed prices. It has to do with the Saudis. It has to do with many other things. And the way I'm looking at it right now, this is a very welcome and a very important, if you're long, it's a very important digestive phase. And that's kind of how I'm looking at it. And so far, I haven't really wanted to change that. Within the context of crude oil itself has had a big same sort of thing. It made a high back around about November the 7th, and now it's down to the 75 level. So going from the 90s to the 70s, that just says it's making lower highs and lower lows. And at this particular point, crude oil is saying there's a chance, absolutely, within the next 6 to 8 weeks that there'll be a sudden spike to the upside. It's the determination. It's not just the speed of any upside move. It is the momentum that builds behind it. And so far, all the momentum indicators from the daily chart to the weekly chart and now even the monthly chart is suggesting that crude oil needs a little more time before it has enough temerity to be able to really not just pop up, but have a multi-week rally. And that's just the way I'm looking at it. I could be wrong. I'm just an analyst, and you're looking at the charts. You do the best you can. I'm just saying that everything that I'm looking at suggests that, and there's a relationship between the crude oil price and the multinational oils, even though it shouldn't be. And there's no way that the price should change if any announcements are made on an intraday basis, because we're looking at these are super tankers. They take a long time to move up, and they take a long time to move down. Now, at this particular point, the monthly chart is just saying this is a big consolidation since the 125. Well, that was the continuous contract. I've got maybe the price was lower than that, but the high that was made back in, let me just check the price. So that was back in right there. So continuous price means that it's now trading 118.24. I have to change that. Nothing changes except the price because it gets smoothed out. 118s. I'll just put 118s. Whoops, not 1,018s. Maybe one day that's where it goes to. Hope not. All right, so it's just digesting gains, and the price is nicely under the 14-period moving average. In the monthly chart of December, the month is still young. All right, that's the way I'm looking at it. So I hope it helps you there. I'm not saying that it's... I had said before that probably shorting any of these is maybe not the way to go unless you were a short-term trader. But as a long-term position player, it's one of those things that Exxon always comes back into fashion. CVX, the same thing. Look, CVX has changed slightly different chart pattern. Let me just type it here instead of where I typed it before. CVX. Yeah, it's the same thing. Made a peak F top around about the 7th or 10th or so of November. Just under at about 187, trading right now at 169. Not such a big deal, but this chart isn't quite as strong as the Exxon chart. However, look at how do you make a doji, the tiniest doji candle that we haven't seen since back in 2021, around about May, June. All of a sudden, it stalls at a month. This, to me, doji. The reason why I've always used doji candles and prefer them to just bar candles is that I just look for the Chapman wave. I only need the highs and the lows. I need nothing else. But for everything else, I like to see. Look at this, the old sunset candle right here. Look at that inverted hammer candle right there at the top of the 14th at 189.68. Opens at 186.31, screams to 189.68, and then closes at 186.18. Closes at 186.55 after 186.18 low. So I just think they need more time. All right, okay. Within that context, let's just do these. So S&P right now is down about 5 points, right there, making a so it's down 5 points at 38.46, and I would just venture to say that the low today of 30. Let me just move that away. There it is. Let me just open that up a little bit. Okay, now I can see all the lows of the day, all the stocks. 38, 34, 55. If at any point there is a move to the 38.42 level in the next 10 or 15 minutes, I say be prepared to have that low made on Friday tested. So let's go to the QQQ, and this is the one that really I would like to see the Q start to lead at some point in the next 6 weeks. Lead the market, even if it's just parallel, but I prefer if they lead. If there is a rally, I don't want to see isolation like we saw the Dow moving without the others. Your general can't lead the troops without the troops following. Down 230 at 271.96. Look at the IWM, the Russell small caps. Same thing, very weak, down 50 cents at 173.85. Look at each one of them. Chapman Wave inside track, repellent zone. Look how they've been repelled from that level. I'll just go back to look at the SPY. Same thing here. This is what I showed on, I don't remember if I showed it on Friday, but I'll do it. I showed it for my subscribers to my opening call. We had another one of those 1 hour long videos, overview on Friday. Look at this. Here's Caterpillar. Look at this beautiful left side, right side price time match. Look at the bar symmetry from 2021, a daily chart, and then it goes to right there, just misses by a few days. But I wanted to show you this SPY. Look at this SPY. Chapman Wave inside track repellent zone. This is a daily chart. I'll be back in a moment. Dow's up 56, S&P's down 7.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So a question came in about XPeng. This is XPENG Inc. Designs, develops, manufactures smart EVs. Down 58 cents to 9.72. Made a peak D. Remember the other day we were talking about that. It was on its way, and I think it did make the D, and now you can see it's making low lows and lower highs. I'd be careful. The other thing is, so GT does work with does a lot with the Chinese stocks and does it very well. But I'm just suggesting that bounce that we saw in the FXI going towards the 200-period moving average, that is the iShares China Large Cap ETF. It stalled at 29.69 is the 200-period exponential moving average. It went to 29.30s or something and stalled there. That would be the target over the next few weeks if the FXI can hold 27.20 to 26.85-ish in that area, and then rally towards 29.03. That'll be a good sign and make that 200-period moving average a magnet. Not yet a magnet, but it will become. So that's what I'm looking at. And my contention has been, I know you do that well, but I'm just saying that there are enough problems that we have here at home to jump into a foreign field where we have to wait for something to happen overnight. So in the meantime, back at the ranch, natural gas made this big move to the upside, made a peak D. That's the one that we participated in. And then it came tumbling down. And it hasn't been able to hold any gain. It stopped at the 50-period moving average. It's coming back into the inside track support level. It was a propellant for a while. It was a propellant, but now it's coming back at 5.92. And if you look at UNG, which obviously is the trading vehicle for natural gas continuous contract, the United States Natural Gas Fund, big gap down today, $1.85 at 18.25. That's 9%. It's almost 10%. That's a big move on the way down because at this point it's looking like the dreaded H pattern is unfolding, and this goes together with what we're looking at crude. Normally, under normal conditions, over a period of the year, you'll see many times up until maybe. I would say probably everything changed last year with the attack on the Ukrainians, and that just completely disrupted everything. But most of the time, up until then, we would often see throughout the year, except deep into the wintertime, you would see that sometimes crude oil would rally and natural gas would fall. They worked in opposite directions. You wouldn't think that, but there are different specters, different fields altogether. So you have to consider that within the context of natural gas, even though this is the winter time, and in some places the winters are ferocious this year, and other times like us, I wouldn't say mild. I don't want to tempt fate. I'm not even going to say it out loud. I'll just say it's been not too bad. But in the meantime, all I can say is chart-wise, this failure today says be careful. We could go towards 17. We're at 1823. I just suspect the best case scenario, just at the moment, is a lowercase h that goes to a lowercase m, forming a rectangle. That means that this rectangle that I drawn in the other day is now going to be much bigger. It's a continuation of the one that we've seen. We can even go a little bit lower. So I'm just saying lowercase h pattern. I'll even draw it in. Let's see if that works out. Sometimes I like to draw the pattern as a speculation, and then we just follow to see if that works out. Okay, something like this. So you've got, why is that not working? Hey, come on. Hello, anybody home? There it is. All right, let's make that. Okay, so there's a lowercase h that goes to a lowercase m. And if you're looking at the weekly chart, look how that 14, the black 14 period exponential moving average has just refused. Why is it not going out of this? Oh, let me just check something here. Format, insert, format, space to the right. Do I keep hitting something? No, that's right, space to the right. Oh, I don't know why it didn't make an H. I'll even make it lower down. There you are. Okay, so lowercase h goes to lowercase m, and the weekly chart is not very good. And the monthly chart made a PD. These Ds can be potent. 2461 was the high on the 23rd of November. And here we are at 1821, 6 points lower, and it actually went down to 16.30. I mean, that was 8 points. So this is something we have to take seriously. Next question came in. Bonds. James Bonds. I always say that. So here we are. Peak D goes to peak E in the daily chart right there in the bonds. And now the bonds are pulling back. When you consider the move that's gone from the 117s to the 132 area, so far, this is nothing. This is just a nice little near-term breather. And we're going to be watching that. Why? Because if you're looking at the TNX, which is the 10-year TNX, which is the 10-year Treasury bond yield, right there, you can see that it ran to a peak D at 43.33. We had bar symmetry, a left side, right side price time match in the daily chart, and it hit it exactly right there, and then it continued lower. I could have put in another one. I haven't really done anything with the bonds, bond chart, although I had a question over the weekend, and then I completely forgot. So this says that the next level of support, and I'll show you right now what we're doing. We're just going left side, right side, price time match, which is bar symmetry. Make that pink right there. Oh, we've gone under it. No, it should have been there. Okay. So we hit it exactly. There it is. We just missed it by a couple of ticks. So this is green right here. There it is. And here's your Chapman wave inside wedge target support line. It hit exactly what we were looking for. Now I can say, okay, that's done. The next one is all the way to there, and I can go to a lower level of price point to use as a support level. Yeah, and that just says this is a cluster formation. And in fact, that's what I was thinking. This confirms it for me, that the yields and the bonds, if you look at the TLT and then go to the TBT, so a trough G/C and the TLT and a peak TBT, a peak G, gap up with an island reversal, which eventually gets filled at 39.32. This is the inverse of the ultra short Lehman 20-year Treasury T-bond ETF. And it went to the 200-period moving average, and it's been stuck there. And I think it's going to be stuck there for a little while longer. So yields are just in a trading band. You've got crude oil, which is making so far lower lows and lower highs. You're looking at the volatility index, which has a terrible time holding gains. And even today, it's down 82 cents, down at 21.80. The Dow's up 44. S&P's down 8 or 9. And look at this. So we're just not seeing the institutional buyers, because that's what you need to get the VIX to hold in a sharp up move and hold at the close. We're not seeing that in a way that makes me a little bit nervous, because it gives you a lot of room to go above the 200-period moving average of 25. And that just says, got to be careful. And naturally, just flying in Denver. Yeah, so Mr. Bull says, natural gas flying here in Denver, expecting 20 below zero foreigner by Thursday, would be coldest in 5 years. So that's the reason why I'm asking the question, what's going on that natural gas? Because it's a look forward thing, and it's not looking forward, 3-4 days? It should already be much higher, not lower. So something's going on there. I'll be back in a moment. Basil Chapman, Tiger Ignitions Hour, Dow's at 23, S&P down 10.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, so using this bar symmetry, looking at the 1-minute chart of the E-mini, we just hit the next level of support, which is at 38.65. So my thinking here is that on a very short-term basis, we kind of oversold. The market doesn't have to know that it's oversold. It just this is the way my interpretation is, and that there should be some kind of a bounce, and that bounce is going to be the big test of whether or not. Because look, the 9-period in the daily chart went under the 14-period moving average. That's a negative in the S&P. It had already done that. Same thing in the QQQ. It has done that in the IWM. This is the left side chart. That's the daily chart. It did that a little while back. So this is saying to me that in order to look for another opportunity on a bounce to possibly short, we haven't got that short. I didn't take that opportunity last Tuesday on that big spike up, and even the Wednesday. I sent out a note and I said, well, I'm going to do it, but it was that was the exact moment it should have been done. But meantime, We are still long, but we're trying to ameliorate some of that by allowing for a possible bounce and then maybe looking at the short side. Why? Because this weakness should last a little bit longer, but I'm also looking at it in terms of oversold and overbought. And my reading says that although there are a lot of stocks that are weakening, there are just enough stocks with some strength to say, hey, if there is a spike to the upside, it could be quite a quick 1 to even 2, maybe 2.5 sessions, and then you can reassess. And if in those 2 sessions there are enough technicals that strengthen, it means, hey, this could go on for a little while longer. But in the meantime, the weight of evidence says downward momentum, and deal with it in a way that says, as we have done, we've raised a lot of cash. We're trying to get some positions that have been holding well, but we're going to watch those very carefully. So with that said, have a wonderful rest of the day. Stay tuned. We've got Steve Rhodes. We've got great programming coming up, and see you tomorrow. And check out my Open Call Daily newsletter. Thank you.